Welcome to the Capital Spreads weekly update. Today is Wednesday, the 30th of March 2011, and the week so far, well, after the dramatic and volatile market moves we had just after the Japanese nuclear reactor disaster, it looks like the volatility in the markets has suddenly and noticeably dropped off. This has made short-term trading a lot more difficult, as it's made it a lot more difficult to move in and out of positions. It looks like the market seems to have totally discounted any further possible negative news out of Japan, as the equity markets in particular seem to have recovered pretty much all the losses that they had just after March 11th when the initial disaster was announced. The market now seems to be focusing on other issues, in particular the ongoing civil war and unrest that we have in Libya as well as in Bahrain, as well as the ongoing unresolved sovereign debt crisis for a number of the Eurozone countries, in particular those of Portugal and Greece, which were again downgraded just this week, as well as the Irish situation, where it looks like the national government will have to nationalise the remaining two independent Irish banks, those that are Bank of Ireland and Irish Life and Permanent. We have a number of stress tests coming out of Ireland tomorrow, which will actually resolve this situation and tell us further as to which way that situation will go. So looking at the FTSE as it currently stands, it's trading around 59.57. It's down about 14 points in the day. I have a chart to show you regarding the FTSE, which looks quite interesting. As can be seen, the FTSE had a dive which followed that of Japan as well as the US just after the March 11th, and it has since made a V-shaped recovery to have recovered pretty much all the losses that it did take over that period of time. So as I mentioned before, that seems to be discounting pretty much all the negative news that has come out of Japan and may possibly do so. As a result, the FTSE it looks like is now focusing on other issues. I have also a longer term chart to show regarding the FTSE, which also looks very interesting. As can be seen, the FTSE was in a long term trend back from June 2010, which was recently reversed. Now the FTSE is bouncing back all the way up to that resistance level around 6,000. 6,000 generally seems to be quite a strong pivotal level for the FTSE, and it finds it very difficult to break both on the upside as well as on the downside. So it looks like 6,000 may very well act as a resistance level for the FTSE and would be a good point to take any profits. Short term, you're looking at possible support around 58.70 for the FTSE if it bounces off 6,000, and you're looking at stronger support around 5,800 for the FTSE. If on the upside it does break through 6,000, you're possibly looking at a short term target around 6,000 on the FTSE. Oil, unsurprisingly, has had a very strong and volatile moves over the last few weeks or so, both off the back of Libya, as mentioned before, as well as Bahrain, where the tension seems to continue to escalate, and that you have Kuwait possibly acting as an intermediary even in that situation. However, the short-term trend certainly in oil seems to be upwards. There seems to be a possible new range in oil between 106 and 96.80, and I have a chart to show you regarding oil. As can be seen, there is a short-term trend, and as mentioned before, it seems to be bouncing off around 106, and on the downside you're looking at support around 96.80. You have to bear in mind that the premium oil is obviously off the back of the Middle East situation, and if that was to be resolved tomorrow, there would unsurprisingly be a strong and short-term sell-off in oil, and that has to be kept in mind. In terms of the week going forward, we have a number of figures over the next few days or so which could certainly move the markets. We have the UK PMI figure coming out tomorrow, and we're expecting a figure of 61.9 versus 61 previously. On Friday we have the probably the most important figure of the month, which will be the US non-farm payroll figures, which will show how many jobs have been added. We're expecting a figure of 190,000 there. Any deviation from that figure will certainly move the markets quite dramatically. Next week you have the Eurozone retail sales coming out on Tuesday, as well as the FOMC minutes coming out later on Tuesday, which will show how hawkish the Federal Reserve has become, and whether they may possibly start raising rates sooner than expected. In terms of client activity, many of our clients have sold into the rallies that we had in the equity indices of the last few days or so. So they are short the US indices, the European indices, as well as the FTSE. They are also short oil. However, they continue to hold long positions in both gold and silver, positions that they've held for many months. Most recently, they've started to go short both sterling euro as well as sterling yen. In terms of a theme of the week, I would say the theme of the week would be continuations of themes that we've had previously, in particular those of the Libyan situation, as well as the Eurozone debt crisis and the fact that that hasn't been resolved. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.